Okay, welcome back uh, to the lectures. This is lecture 2. Hopefully you've gone over some of the things we talked about in lecture 1 and gone through the material and learned a little bit about the market profile graphic, the value areas, points of control, the rotations, and all of those good things in there. And today we're going to move on and we're going to talk about how these profiles give different looks. They form different structures, different uh, visuals. And the markets are very visual. We have very important parts in there with our points of control and our areas of value. And, we can get into how the market moves from balance, a value area, out of balance to another balanced area, and so on. But we're going to, go ahead and take a look at these different things here. And first, I'd like to talk about responsive and initiative activity, where it happens and what it's at. And here's a pretty good example of responsive activity. And you can see here, this little graphic right here represents the prior day. And then this graphic would represent responsive activity, on the next day. So you need to take note of the A period, the opening of this current day in relationship to the prior days. And you can see it's called responsive activity because you open up higher, here's your A, and the market moves down, okay? It responds to the higher open and the higher prices, and it doesn't like them, so it moves back down to get in the range of the prior day. And it says here that traders think the prices are too high above value, so as the market opens up in what could be higher value, it just sells off and tries to get back into the prior day's value area. And same here, note the A period. So here's the prior day, and the A period opens lower, and it responds to the lower prices because the traders think prices are below value, and the A period opens up and goes up, and then tries to get in the prior day's value area. So those are two examples of responsive activity. And if I can, I'd like to show you in a real chart, responsive activity. And you can see here the market closed on a high, and then the market opened up about one tick below that high, and you can see the A period and the B period and even the C period came down and got into the range of the prior day. So there's a real life example of responsive activity. You can see it comes down here, even an F period, and tests the value area high of the prior day. So at the beginning of the day you had the responsive activity. It comes down and tests the value area high. Once again, a very important price level that we talked about in lecture 1. And then the value area high holds, and then it one time frames up and tries to push up. And Now this profile here also is responsive activity, because you can see here, here's the prior day's close, and the market opens up way down here where this yellow stuff is, and you can see the A period and B period, and the thing moves up all the way through D period, and it tests the prior day's low, and there's no interest in getting into the prior day's range, and so D period, it just sells off, for the rest of the day until the close, L period, and the traders just like want to go home flat, so they just, snap it back into value, at the point of control. So there's two examples. Both of these are responsive activity. This is responsive activity in relation to this day and its range, and this is responsive activity in relationship to this day. And so that's a real life example of that. And let's go ahead and learn about initiative activity. And initiative activity is different. If you can note here, your A period, here's your prior day, and the A period opens up a little bit in range, and traders move the value of the market higher. And this is aggressive stuff. This shows the traders are have decided even before the market opens that they're going to move the value of the market higher. And it doesn't get too much in the prior day's range. A lot of times it'll open up higher and go even higher. And same here now. Using this as day one, the market opens up the low of the prior day, and it's initiative. That's it. They don't want it to get into the prior day's range. The sellers come in right from the open and push it down, pretty much for the rest of the day. And I've got a really good example of initiative selling right here on a real time frame chart, and it's right here. And you can see here the prior day's close, which is this red stuff, in this end period. That's like, 415. And you can see the A period here. The market opens up, at the low of the prior day, and they just come in and just sell it. It's aggressive selling. You've got a strong A period down for about 4 or 5 points. B snaps up a little bit, and then it just continues selling off, all the way to B and C down here for, you're looking at, 10 or 12 points. And so that's a great example of an initiative selling right there. Okay? So hopefully that'll have you getting a better understanding of the opens and initiative and buying and responsive activity in the market and the aggressiveness of opens and all those kind of things. Now, let's go to slide 2. And we learned in lecture 1 about the distribution curve, that the Gaussian it's just a Gaussian, the market profile is a Gaussian distribution placed on its side on basically the y-axis. Okay, basically in your charts, the x-axis is the time axis at the bottom, and the y-axis is the price axis. And so this just tells you that you've got a lot of traders agreeing on price, at this in this Gaussian distribution, in this value area. It's where 70% of the trades went off. The market's happy there. There's a two-sided auction. There's probably not large traders in the market that day because you don't see any kind of breakouts above or below the value area or anything like that. So that's our distribution curve. And a normal day of trading is basically you have a wide initial balance, and because the initial balance is so wide, it really not going to break out a lot. You've got a little bit of a distribution. You have some slight extension, of the value area. And that is kind of close to what that kind of profile would form and look like that day. And here's a normal day, same thing with a little bit of variation, meaning, it tries to elongate a little bit. And, in the early trading hours, we stayed up here and we can see, after the initial balance, another time frame trader, bigger boy, in D period tried to extend and move the market down a little bit, but, it just went back into value. And this is really, you'll get a lot of these are just neutral days. You get a nice distribution, a little bit of a range extension on it, and all that kind of stuff. And these kind of days, like this normal days and this normal variation days, balance days, and all these kind of things, as we learned in Lecture 1, time regulates the market, and you're going to get these kind of neutral and normal days on basically non-news days, because there's no real catalyst to drive the market. The bigger boys trade like bigger news and all this kind of thing. And we learn the market's structured. Mondays and Tuesdays are generally not big news days. Wednesdays, Thursdays are. And so you would be looking, you could go into anticipation of on a Monday or a Tuesday or a Friday of going like, all right, I'm going to probably get, some kind of neutral or normal type profile structure today and adjust your trading accordingly. Whereas on like big news driven days, you're going to get, something like a trend day. And the characteristics of a trend day are, you're basically going to get a more elongated type of profile with some possible anomalies in it, like single prints and stuff like that. And that's basically what makes a single print. Is basically, the market would be, staying within the value area in anticipation of the news. We talked about news, happening, on a half-hour schedule, and the market profile is set up on a half-hour schedule. So, it's news at 8:30. Well, that's a rotation time. It's news at 10. Well, that's a rotation time. You don't have news at 10:07. Okay, they don't do that, and so that's why it's important, and for you to recognize, this market profile graphic is set up in relationship to the market, the news days, the cycles, and all those kind of things. And that's an important point to note. So then you should be able to, in time you learn, today's Wednesday, I may get a trend day. I may get a double distribution day. Okay? Don't get me wrong. I mean, there's some days, like on Mondays, I usually look for some kind of normal day or a balanced day. But, there's going to be some days, depending on market dynamics, that you get a pretty elongated profile on Mondays. So it's a percentage type call there, But you can go in, and by assuming, well, today's not a news day, I'll probably get a neutral day, and then seeing how the market profile graphic is formed that day, you can tell, what's going on. You can get an assumption like, the market value levels are not in sync with the upcoming news, which, of course, they already know, what it's going to be and all that kind of stuff. So this is a pretty strong day. You want to look for these, at or around news-driven days, And then the final type of profile structure that's formed is called a double distribution. And one of the characteristics of these is what's called single prints, and that's just basically, we know that each TPO is, you know, a 30-minute time frame. And you can see here, F, you know, I can tell you right now, this is important out of TPOs. You know, the market opened up and traded around here in B, C, D, and E period. There was obviously some news event, you know, around noon or something, around F period, and the market shot up and then began making a new value area on that day in the FGHIJK towards the end of the day, and it never pulled back and got through there due to that news event. So this is one, you know, a very strong type of day. So you should be able to learn from this. If you got a profile that looks like this and you get priced back down here, don't short this. You know, the rule of thumb on this is that you know, this day is looked at as a brand new day. It's a whole new ball game, so to speak, up here. So that profile gives you that kind of insight into that thing, and you can look at it and go, okay, you know, here the market's waiting on the news. It liked the news, it broke out, and now it's moving value, you know, up in here, and it's holding. Okay? So I'll go ahead and upload this presentation, you know, and these documents with Lecture 2, so you can, you know, keep that, you know, in your records and you know, reference them. Okay? So I hope you enjoyed the lecture. You know, I enjoyed talking about the market profile, and, you know, maybe you got some good tips and tricks there for you to make some good trade decisions. Thank you for your time.